Have you ever heard the expression, my business is my pension? Well, I would say in most situations that's delusional thinking. If you want to find out more on why this is not true, then watch this next video. Hi, my name's Rob Goddard. I'm a serial entrepreneur, and today I've been joined by John Surgenor, who is a financial advisor. Nice broad term, but perhaps you could, nice to have you on board, John, today, and to share some of your sage advice, I think, when financial planning. So perhaps you could tell the audience who you are, what you do, and why you do it.
Rob, thanks very much for inviting me on today. Yes, I'm
Pleasure.
John Surgenor. I'm a chartered financial planner, but more importantly, I am what is known as a lifestyle financial planner. There's so many terms in our profession, but like lifestyle financial planner is what I go with. I put clients at the center of everything rather than their money. So my focus with clients is return on life. What is their return on life rather than just return on investment? Are they using their assets, whatever their assets may be, to get the best lives possible? And that's what we do, and that's what we continue to do. And we have very strong long-term relationships with our clients who value that kind of advice. Why do I do it? Well, just being a financial advisor wasn't enough for me. Selling products, selling investments, having an annual review meeting where you said, oh yes, your investments were actually 0.25% higher than the average last year. That's backward looking. We're forward looking planners. We're not product salespeople as such. I know you know, Rob, but I had a brush with near death a few years ago. I was quite ill for a couple of years, and it just reinforces that life is slipping away at incredible speed. Life is not a rehearsal, and we don't know what's around the corner. You might get city asset managers that can tell you what's going to happen or what they think will happen in the future with markets and things, but no one knows what's going to happen even by 5 o'clock this afternoon. So it's my job to help clients, and I've felt it personally, to get the best lives possible.
That's what I love about what you do, and we've known each other for quite a few years, John. But what I love about what you do, it's about the future and creating the life that they want. And we're talking specifically about business owners today, because they, unlike employees, they have something that could be worth a lot of money, which is called a business. Well, it's very hard to save up a large sum of money as an employee.
That is true. That is true. And business owners tend to be our ideal clients because, well, I'll tell you why, because let's assume that they're not saving enough. Let's just assume that they're busy people, they're heads down in the business. So then personally, so if they're looking at themselves, they step outside and looking at themselves and their families personally, are they saving enough? If the answer is no, well, they can do something about it as business owners, whereas employees, of course, they can get promoted, they can get higher salaries. However, business owners are in position A to affect their futures.
They are. And the difficulty I found working with business owners, because you know what I do in my job, the last 20 years, I've been creating multimillionaires, over 300 of them, in fact, over those 20 years. What they don't tend to do is look at the future. They look at selling the business, end up with a lump of cash in their bank account, then think, what am I going to do with it? And of course, the revenue love that, having lots of cash sitting in bank accounts.
Of course, yeah, of course. And I would urge business owners to speak to a lifestyle financial planner before they press the button to hire your ex-company, the company that you may still have very close links to. Because let's just take the scenario, Rob, if you and your team can sell my shares in the business for £3 million. Let's just, as an example. And you've suggested go and speak to John, and we've projected forward all the things that they want to do in their lives, how they want to, their experiences, whether that's holidays, whether that's buying their dream car or cars, their dream holiday home, helping children with grandchildren, whatever, whatever it is. And the number comes out at £4.5 million. They've got a bit of a dilemma then. So if I sell for 3 million, you're saying that's not quite enough to be able to do all the things I want to do in life. Well, based on the assumptions, prudent assumptions that we use, no. So companies like Evolution and ourselves should work closely together, kind of joined up thinking for business owners, because it might be, and you may agree, your company may agree, that they should wait a year or 2 years. Perhaps they're in too much of a hurry to sell. They've kind of fallen out with fellow directors over the years, or they just don't want to do any more appraisals. They're not an entrepreneur anymore. I think I know one of your books refers to that, and they're just not enjoying it anymore. Well, it might still be worth their while waiting and just building it up such that their value can be built up. So when they do sell, they have the sufficient resources to do all the things that they've always wanted to do.
So one of the key things you've just touched on there, John, is finding out when the cash runs out in life after sale. Because usually most business owners only sell once. There are some that are multiple sellers, but most people, it's usually a one-off deal in their life.
Mm-hmm.
It's usually the biggest transaction of their life. Normally there's an extra zero compared to a house sale for the sale of a business. So this matters and to them. So having some clarity about the number that they need the business to be worth is essential, isn't it?
It's absolutely essential for them personally. Why spend years? At some point, they took the decision to start up in business, which is a massive decision in any case. And I always like asking clients, how did you get started in this business? It's a really fascinating story of how they work the long hours. I mean, your story is a fascinating story. And they've spent all this time, blood, sweat, tears, remortgaged the house, whatever they did in the early stages to build this thing. And if it doesn't give them the life that they want because they've not sold it for enough, then I think that's a real shame and doesn't need to happen with joined up advice.
I agree. And the corollary really to it is that sometimes the business is worth more than they need it to be worth.
Mm-hmm.
What a first world problem, isn't it? What a wonderful position.
Mm.
And that takes some of the pressure off the business owner thinking, well, actually, I don't need a gazillion pounds from it. I only need X million. And then I can go on to the next part of my life, knowing that I've got the financial security for me and my family and the people closest to me. So what you're offering is a really important service, which is why I've referred clients to you, because they need to get this clear long before they put it on their business on the market to sell.
Absolutely right. And I think being able to sell for an extra naught, or and I would call them Mr. and Mrs. Too Much, if you like. They're not going to run out. They don't need my services to show them that no matter how much money they spend, no matter how many holidays they go on, they are not going to run out of money in their lifetimes. However, we still need to help them maximize it, maximize their return on life. However, more importantly, we not only do we help clients live the lives they want to live without fear of ever running out of money. Most importantly, for this type of entrepreneur, we also help them or stop them dying with too much, if you know what I mean. Because our Chancellor, Rishi, he's looking to raise a few quid. Let's be honest. He loves people that die with too much. So throughout an entrepreneur's, once she sold the company, we can help them articulate a spending and gifting program, for example, so as to minimize the amount that if that's really important to them, to minimize the amount that goes to Rishi and increases the amount that goes to their children, their grandchildren. I mean, what is a legacy? Is it just money, or is it money that a great grandchild has to help them through their further education? And it was my great grandparents that I never met them, I never knew them. That's a legacy going down the generation. So we can help with that spending and gifting program, so they don't die with too much.
You know what? I love that concept of dying with too much, because often we focus on not having enough in retirement, whatever that means to an individual. But there are people out there that have surplus assets and income, and they know if they don't do much about it, they're going to get taxed on all sorts of things. And it's number 11 Downing Street that benefits rather than their nearest and dearest. So I think that's a really good way of looking at it, because not everyone is, some people have got surplus and they're looking to use it put it to work in the most effective way. So are there, what barriers do you tend to come across with business owners when you're talking about this, looking forward into the future, their future? Are there some common barriers, hurdles that are put in front of you?
We tend to see, yes, we tend to see the business owner and their partner. So we deal pretty much with couples, because there are two voices in a relationship. So we want to see both, and we have almost like an informal chat about how they see their what are you going to do when the kids have grown up and flown the nest? What are you going to do when you stop doing what you're doing at the moment? And very often, because they're such busy people, they've not really even sat down with their partner and tried to think about what the next stage might be, or when in reality the next stage might be. So we ask very searching questions which they might not have been asked before, and we very often get one partner look around at the other and say, "I didn't realize that was important to you." I think genuinely, we don't want to start World War III, of course, but it's fascinating. So I believe an informal initial kind of discovery chat with someone like myself allows a couple to really start to form their plans. We're not going to do it in one sitting. Of course, we're not going to do it in one sitting.
Yeah.
It's often just the start of the next phase, the next chapter in their lives, which all these transitions we need to prepare for. So the sale of a company, as you say, is a massive transition for business owners, and it's always, in my experience, better to prepare than repair.
I like that. And obviously there are a lot of financial planners, IFAs, advisors in the financial sector.
Yeah.
What makes you different, John?
Well, I go back to being what I call a lifestyle financial planner. So, and I'm independent as well, because at some point we may need to arrange some investments. We may need to be an IFA, if you like, but anything that we advise on, implement, products, gosh, hate that word, investments, all leads into a financial plan that we'd have crafted with, not for, but with the clients. So it's not guesswork. So the financial life plan must come first. And when we have formal annual planning meetings, the first thing we do, the most important thing we do, is update that plan. What has happened in your life? What has changed? And we might spend 2 or 3 minutes on the investments and bits, because they're not ultimately important. I've yet to meet someone looking back on their life, or even read about someone looking back on their life saying, "Do you know what, John?" Or, "Do you know what? I wish I'd got an extra 1% per annum on my portfolio." No one has ever said that. What they do say, yeah, bizarrely, there may be a first. There may be someone out there that I'm not aware of. So it's more like about be about experiences. I wish I'd spent more time with my daughter. I wish I'd done Route 66 in that on the Harley Davidson. I never got round to it. I wish I'd done this. Wish I'd bought a holiday home so my whole family could enjoy summers together. They tend to be about experiences. I wish I'd started that business. There are a lot of things that people look back on and not regret as such, but wish they'd done a little bit different. So I'm a lifestyle financial planner first and foremost, and there are some of us, and I would encourage any business owner to seek out someone who's independent rather than restricted. But also, what is your service proposition? And a lifestyle financial planner will quickly talk about them and what they want to do, rather than their wonderful wealth management process, which and also I think our profession, it does seem to be all about assets under management. So private equity group A have just bought into a large national advice firm, and the assets under management are X, or company A has bought company B and now their assets under management are, it's the wrong way. We are, might have mentioned earlier, client stories under management. It's gathering stories under management, not assets.
Yeah. I mean, you're people orientated, not product.
Indeed.
Yeah, your focus is
why didn't I describe it like that?
That's because I'm listening to you intently. You can have that one.
Okay.
Register it as a trademark.
Thank you. Will do.
People, not products.
We'll write it down.
So, I mean, you've given some tips there. I mean, the one I really liked from a moment ago was the gifting with people that don't want to die with too much.
Yeah.
Any other couple of tips that you'd share with the SME audience that's listening and watching to this that you found over the years you've been doing this? Couple of giveaway tips.
Okay. Well, I'd encourage them, if they've not done so already, to think about when they want to stop doing what they're doing.
Right.
That act of thinking about it will lead to other areas, and share it with your partner, of course, if you haven't done that already. When do you want to stop doing what you're doing and start doing what you really want to be doing for the next chapter of your life?
I feel a Spice Girls song coming on, John.
Yeah.
What you really want to do.
Brilliant stuff. Are you going to sing it? Are you going to hum it?
I won't inflict my audience on that.
Okay. But
yeah, that's true.
Yeah, and so I'd encourage them to do that. I'd obviously encourage them to get some joined up thinking, joined up advice with their business exit, business sale advisors, and a lifestyle financial planner. What other tips? I mean, there's some pretty kind of producty ones, really, but have they maximized pensions, for example? I know that there are certain loopholes, no, not loopholes, there are certain traps with loopholes. Pitfalls.
Be giving loopholes
with pensions that, again, Rishi is happy about if your pension pot's too large. However, I see, and business owners often think my business is my pension, and it may very well be, but Rob, you'll know the statistics more than I. Is it 80% of businesses don't actually sell? The 20% that do sell, do they sell for quite as much as the business owner had wanted for his or her shares? Possibly not. Depends on prevailing conditions.
Depends who they use for the sale of their business.
Well, of course. Yeah.
But the other statistic, John, is that 20% of startups never get into year 2. Wow. And 60% of startups never get beyond year 5. So when people talk about my business is my pension, the likelihood is in 5 years plus they won't have their business. So it's about taking action now, prudent action, in order, whilst the business is in existence.
Well, I like that one.
You like those stats? You can use those.
Make a note of that one.
Why anyone would set up in business, I don't know, because the odds are stacked against us.
Gosh, yeah, but it's
we do.
Little voice inside you, isn't it, saying you must try this.
High risk, high reward.
I tell you, for business owners paying into pension, what are they doing? Oh, they're paying into pension, but they're not really. What they're doing is buying an insurance policy in case they don't sell their shares for as much as they want. That's what a pension pot is. So if you've got £1 million in your pension pot and you get 2 million for your shares instead of the 3 million, well, there's your other million. And Rishi has actually chipped into that pension pot for you via indirectly via giving you corporation tax relief as a limited big company. So it's an insurance policy and not about for not getting quite enough that you had envisaged.
A question. I'm springing this on you, but I know you can take it. I believe that £1 million is the maximum limit for a lifetime to put into a pension.
Pretty much, yep.
Okay, how much does £1 million, if you have £1 million in cash sitting in your bank account or a bank account, what's that going to generate as an income?
I think if it's in a building society, you might get 1%. You might get a little bit longer. So, £10,000 a year.
Quid a year. Your million.
Yeah, and there'll be a little bit
inflation.
And the final insult will be there'll be a little bit of tax possibly to pay on that as well, depending on what your other earnings are. So that's a bit cruel, really. If a 60-year-old wanted to exchange that £1 million for an income for life, a guaranteed income for life, I should have checked the current annuity rates, but they might get 3.5–4%. But then they might say, oh, what if I died? I'd want the income to continue to my partner, and then the starting level just keeps dropping. Oh, I want a bit of inflation proofing, and it just keeps dropping. So really,
it comes up. It regularly comes up with business owners that I meet.
Yeah.
Because £1 million sounds a lot, and it is a chunk of money. But if you're going to live on, that money can go. And if annuity rates are about 3.5%, to get 35–40 grand from a lump sum of £1 million, most business owners earn more than 35–40 grand in salary. So they're taking a pay drop, and yet they've got £1 million that's been used to buy an investment vehicle. Yeah. So it just goes to show that you probably need to sell your business for more than £1 million. That's
a fair comment.
To live it depends on people's spending patterns, but some people can live quite cheaply, but others can't. So it doesn't seem a lot, does it, when you bring it into monthly income?
No, it doesn't. And our profession eternally argues about what a safe withdrawal rate is from an investment, whether it's a pension. Otherwise, it's anywhere between 3.5% to 4%. And when we say safe withdrawal rate, that's the rate so that's 40,000 a year on your £1 million. That's the rate that you can withdraw without really ever running out of that pot running out under normal circumstances, if it's invested appropriately, all those sorts of things. So again, £1 million, 40 grand a year. If it's pension, some of that might be taxable. So it's not a lot. What I do offer, I speak to my professional connections, so accountants, 1 or 2 bits, say, look, if you've got clients and they're busy, but in a 15-minute Zoom conversation with me, if they can tell me how much income-wise they will ideally need in retirement, I can tell them how much money. I can tell them what their magic number is in 15 minutes. We'd have that conversation, and I offer that to any listeners. Just arrange a call with me. So if it's £100,000 a year, John, this is what I'll be able to tell you what your kind of minimum magic number is, and it's quite shocking how much. So there's an offer.
There you go. Do you know what? And I think that's a really good note to end on, because at least we get a sense of we get a reality check, and then we can make plans whilst we're still living and breathing and well, in order to enhance that. But we need to know what the starting point is. So
We do.
yeah, no, I think that's, if by all means, if that's 15 minutes, you can give them an indication as to what that's going to generate for them. Brilliant. And I'd also, John, if anyone that's thinking about selling their business, I'm happy to do a double header call anyway.
Thank you very
With
much.
someone, years in advance, happy to join that call as well. So they can get 2 for the price of 1, which is, they're not paying anything anyway.
You've got to be worth more than 1.
Well, they'll even get a free copy of my book as well.
So talking about books, just to end with, talking about books, is that the right way round? I'm not sure. But
it is, yeah.
On the 30th of October 2016, you may remember, well, perhaps a day after that, receiving that book, because I sent this to you first class on that date. Have you read it yet? It's quite interesting. It's by the godfather of lifestyle financial planning, a chap called Paul Armson, and it's very easy to read book, takes 2 hours. It's called Enough. How much money do you need for the rest of your life? And again, as another offer, I have some supplies of these. If any business owners want to get in contact with me, john@barringtonhamilton.co.uk, the first 20 will receive a complimentary copy of a book that might just be the most useful financial book they've ever read in their lives. So the first 20.
Thank you, John. No, that's very generous of you. And people can get hold of you on LinkedIn as well, because I know that you've got a profile on LinkedIn.
Indeed, thank you.
So look, thank you for your time and your pearls of wisdom. And I did surprise you with a couple there as well. You dealt with it manfully. Well done. Not that I anticipate anything else, but thank you for your time. And we'll flash up at the end of this video with your contact details so people can get in touch direct with you.
Rob, thanks ever so much for inviting me on again.
My pleasure. Cheers, John.
Cheers then.